Hello Wolfpack, Bitcoin has dropped below 20.8k. It's seen a daily candle close below that critical level, and that is a critical level, right? We've deemed that as very important. In fact, that was part of our buying plan. We've now dropped below it, and so it kind of begs the question, well, how should we be reacting to the current Bitcoin price action? And that is a question we can't simply answer. It's not obviously objective. It's based on your personal risk tolerance. Some people are happy to hold, some people are happy to sell here, but I'm going to be getting into short-term charts and why it's probably not as bad as some people think it might be at the moment. We do have major events coming up. We have the US election today, and we have CPI coming in just about 2 or 3 days here. So, stuff's really ramping up in the market. We really got to discuss some of that stuff today. Let's get into it, guys. I want to start the video out by saying this. The bottom at any time in this bear market has never been confirmed. We have never seen confirmation of the bottom on Bitcoin, which is interesting, right? Because if we look at our community polls here, and I consider this to be a channel that leans towards the bearish argument and has led towards the bearish argument for about a year. 41% of people, even on my bearish channel, I guess you could say it's a bearish channel, right? Believe the bottom is in. That's interesting, because the bottom's not being confirmed by any metric at all. In fact, it's not even close to being confirmed. We look at the volume profile, okay? Volume profile is very good at helping us understand these longer-term patterns. We can see there is a massive gap on the volume profile between 24K and 28K, meaning that if we break above 28K, we enter a new range. Here's the thing about the volume profile, right? The volume profile is very good at giving us indication about where the ranges on Bitcoin are, historically speaking. And what it tells us here on the volume profile is there is a big range on Bitcoin between 18K and 24K, through which we see a lot of historical trading volume. There is also a big range on Bitcoin between 28K and around 40K, through which we see a massive range of volume on the volume profile. There is no range, meaning there is no historical price range between 28K and 24K. That means, right, in order to exit this range and in order to break out above this local range, hence confirming a bottom of this range, hence confirming a bear market bottom, we need to break at least 24K-ish, okay? And more likely, we need to enter the new range at around 28.6K. Guess what? 28.6K on a horizontal line can be drawn like this, and you can see very clearly that 28.6K is a very clear, concise, and defined resistance zone. If we break above that, what does it do? It means we enter the new range, and this entire period of price action between June and November is kind of crossed out and not relevant anymore, because we're in a new range and we'd be at the bottom of that new range and we can start moving upwards. So that's the first point. The first point is the bottom is not confirmed. The bottom is not being confirmed in any way, shape, or form. I've never said the bottom was in. This buying plan that triggered at 20.8K unfortunately didn't play out. I was incorrect. However, it was not meant to be a macro indication of the bottom. I never claimed it to be that. It was meant to be a predictive move for a shorter term swing trade. Unfortunately, it clearly has not worked. That's unfortunate. But luckily, if we followed the buying plan, right, the buying plan was buy at 20.8K, we broke out 20.8K, and the second part of the buying plan could be, depending on your risk tolerance, sell if we drop a daily candle below 20.8K. If it did play out like that, you would have lost about 1%, about a 1% loss in the trade. So effectively not much at all, essentially nothing. So it's not a massive deal, right? And considering the risk-reward ratio of that trade, I'd say it was favorable, even though we lost 1%. What we stood to gain and the percentage chance of that happening versus what we stood to loss and the percentage chance of that happening was very much in our favor there. So unfortunately it didn't play out. But what we need to look at now is we need to move past that. We need to understand, okay, what is going to happen now? If you're still in that trade, if you're still holding that position, you're not necessarily in a bad spot. That's the first thing worth mentioning. You're not necessarily in a bad position if you're holding that trade still. So let's get into that. Let's get into analyzing that. What was the importance, first and foremost, of 20.8K? 20.8K, if we zoom up, we can see 20.8K, let's draw a line there, was the headbutting zone. It was the rejection zone on the way up that we saw about 10 days ago to 2 weeks ago. We rejected off that level twice, right? And we came down after rejecting off that level. Guess where we went? We went to around 20K flat. After bouncing our heads off of 20.8K, we came down to 20K flat, okay? We broke above 20.8K, we dropped below 20.8K, now we're on the way down. Where is our next support? Guess what? It's at 20K flat. So right now, okay, you might still be in that trade. You might want to hold on to that trade forever. You might not want to sell. You might not want to deal with the emotional stress of trying to catch the bottom. And that's fine. You could do that. I'd say 20.8K is a decent buying price for Bitcoin in general. That's the middle of this lower range. So you actually get a pretty good price regardless of what happens next. But what I would say is this. Zoom into the hourly chart. See what happens. What happens on the hour chart? What are we looking at on the hour chart? We can see if we draw a structure, I don't know if it's played out yet, I haven't checked this chart in about an hour, but generally speaking, okay, it's kind of actually dropping to the downside now, but the point is, it hasn't yet. It hasn't dropped to the downside yet. It might be by the time this video's out, so we'll have to wait and see, but at this point in time, we still are in a descending channel pattern, okay? Descending channel pattern is a pattern of reversal. It's a bullish price charting pattern, okay? Looking at something like, let's bring up the RSI. I'm sure the RSI would be showing us something right now. It probably, yeah, it is. Okay, so bullish divergence on the RSI, bullish charting pattern. Let's see volume. Volume is, we're on the Bitstamp chart right now. Let's go to the Binance chart so we can get a better indication of volume. There we go. And the reason why we did that, right, is because Binance has the highest trading volume, so it's the most accurate. The volume is decreasing in the downwards trend, which is a sign of exhaustion. The sellers are exhausted at this point in time. And so, you know, it's pretty likely at this point. You know, I don't know about this fake out we just saw, but the point is right now on the shorter term, if you had to guess based on objective TA, you would probably see a swing to the upside, and you'd probably see a retest of 20.8k. Okay, that's just what you generally see if that TA played out correctly. Now that fake out kind of throws things into question, but the point is the shorter term price charts right now are not indicative of a major breakdown that we can't recover from in the slightest. Okay, they're actually indicative of a short term trend reversal. Now, do I think that this will break to the upside? Do I think we'll get back above 20.8k? Look, it's hard to answer that question. And the reason it's hard to answer that question is because we have major events coming up. If I was to look at this chart objectively, if I was to look at this chart and there was no events coming up, what I would say was this: I'd say we retest 20.8k, then go down and drop below this range. That's what I'd say, because this is, of course, a massive top formation. This is almost essentially a rounding top formation on that level. So I would say it's more likely we go downwards here, but the problem with that is that we have the election today and we have CPI in 2 days. And, you know, when it comes to CPI and the election, major events, I don't think an hourly chart descending channel is really going to do much, right? The point is major events have the control right now. It's not the hourly chart that has control, it's the major events. I want to briefly interrupt this video to talk about the BitGet exchange. Now, the BitGet exchange has 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange in the cryptocurrency market. It's also non-KYC or voluntarily KYC, so you can stay true to the fundamental values of cryptocurrency, one of which being anonymity, of course. It's also got a security fund in there, so if you lose your funds by fault of the exchange or by personal fault, you can make a claim and actually retrieve your funds back. On top of all of this, if you sign up using my referral link, you can get access to exclusive discounts and rewards. This is the best exchange on the cryptocurrency market, and I use it personally, and so should everyone at the Wolves of Crypto YouTube channel. Now, if you're interested in actually learning how to trade for yourself, you can check out the Crypto Academy via the website link in the description below. This is a course developed by myself and Megaworld Crypto, a 10-unit course taking you through every single step from step 1 to step infinite about how to become a trader. Go ahead and check that out and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the full information and payment information if you're interested. Thanks guys for watching the advertisements. Let's get back into the video. So what I would say to you is this: if you're still in a trade and you don't want to hold and you want to get out of the trade, I would say wait for a breakdown to 20k, because 20k is very clearly a top of the local range on Bitcoin, right? At the bottom of the local range on Bitcoin. If we drop below that, we're heading down further towards the nearest support, which of course would be around 19.6k, which is the 2017 all-time high, and that's been a vague support resistance zone throughout the entirety of this range since August, and even back in June if we zoom back there. So what I would say is this, and this is kind of the overarching point of the video, all right, and I do want to look at these charts quickly. Every chart's at resistance right now. Ethereum's at resistance, total cryptocurrency market cap is at resistance, and Bitcoin is at resistance. And Bitcoin is not only at resistance, but it's also rejected off of strong resistance. It's rejected off of the bull market support band, which is not a good sign. And at the same time as all this is happening, we're still seeing, and this is important, we're still seeing major compression on the weekly chart, meaning a big move is still yet to come. And we still haven't seen a confirmed bottom on Bitcoin. There has been no confirmation of the bottom. I would say, I've never not said this, I've never moved away from this prediction. The Q4 bottom on Bitcoin, as per the 4-year cycle theory, is still active until proven inactive. It is still valid until proven invalid, and it's proven invalid at the, well, it's started to prove invalid at around 24, 25k-ish. We're nowhere near that price point, right? And it's still valid. Therefore, we have to expect, as per the 4-year cycle, lower prices. We just have to. Now, whether these events in the next couple of days toss things up or not, that's a different question. We're going to have to look into that when they happen. I would like to just look at something I just kind of spotted as I was talking there. I'm going to see if this works. I haven't actually charted this before, but I'm just looking at this roughly and just going to see if it works. It almost seems like we could have some sort of ascending wedge here on Bitcoin as well. which is worth watching. If we lose that ascending wedge, yeah, you're definitely going to be expecting a breakdown towards the lows of 17.6k. I will like to add as well, just briefly, I don't think there's much of a massive chance we see sustained price action below 17.6k. I do think we'll see a Q4 bottom, but at this point in time, I would say it's very, very likely it's a double bottom. I really don't see it as incredibly likely we drop below this range anymore. Previously, I said quite heavily that I was looking at possibilities of going to 13.8k and 11.5k. They're still possible technically, but I think they're dramatically less possible than they were in the past. I think at this point, it's very, very likely that we do see a bottom at a double bottom, and maybe even a slight wick below at around 17k, 16k. That's what I'm thinking at this point in time. I'm not going to get into that too much in this video because I'm kind of trying to make this video as quick as possible to give you a brief rundown. But I will look at that in the future. And if we if we break down from this wedge, break down from 20k, break down from 19.6k, we'll start to look at that question more extensively. But at this point in time, I think it's just worth noting that, even if we do go down here, I think that we're very, 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 very close to the bottom, right? Even if we drop below the bottom, we'd be very close to it. I think Bitcoin is, for the most part, bottomed out. Okay, that's very important to note. Maybe not technically, right? Yeah, we'll probably have to retest it, probably have to go below a little bit, but for the most part, on a general scale, this range that we're seeing here will probably be the bottoming out range. I don't really see how there is enough time in the 4-year cycle for Bitcoin to drop down below even further and start a new range down here somewhere and then go up. I just don't see that happening. And even from a technical standpoint, even from a standpoint of what the macro data is doing, inflation's topped out, right? Inflation topped out at 9.2%. We're expected to come in at 8% this month. Interest rates are starting to wind down in December, most likely. The next basis point hike is most likely going to be 50 basis points, which would be a pivot from the Fed. It doesn't seem like there is enough macro pressure at this point in time to push Bitcoin very far downwards, like there was maybe 2 months ago if we were looking at it objectively, but that's just vague speculation. We're going to get into that a lot more in future videos. But I would like to say this on a final note. Bottom's not confirmed on Bitcoin, never has been. Q4 bottom is still active. It's unfortunate that we didn't go higher than 20.8k. I was expecting to go higher there, but unfortunately macro events seem to have tossed that out the window. As of right now, if you're still in that trade, 20k is the next level you need to be watching. That could very well still hold. If the macro events come in bullish, we could see a bounce off of 20k. We could retake that bull market support band level, and we could look pretty good. We'll just have to wait and see, guys. Thanks for watching. Hope you enjoyed, and I'll catch you in the next video. Cheers.